Well, good afternoon, everyone. Scott Henderson, shooter. Hey, we're going to go over some notes on different swing setups and some Elliott waves and whatnot. Of course, at the end of our presentation, please do review our disclosure. All right, so let's talk about the dollar here. You know what I find absolutely ironic here is that we are continuing to push high, but yet notice how the dollar is pegged. And that's really contrary to what we should be seeing. We should be seeing a dollar pushing towards 96, and we don't have that. It's stable. So that to me implies that we have significant intervention here to some degree. Somebody's buying, propping up the indexes. And, that becomes really challenging, especially when you look at the breadth and what names are getting bought. And it's too organized. It's almost like they have a blueprint of exactly what they want to execute, and then they're executing it. And when you can visually see it, that's how it plays out. So the dollar, in my view, I think the bounce is done. So I think we have, once it pushes below where I have it noted as turns bullish equities below, I think we could have a rocket once that dollar dips closer to 96. And everything's lining up. Earnings are in good shape. We just need a resolution to the Iran war, or the notion that we're going to win and it's over with anyways. And then once that gets behind us and the Straits of Hormuz gets ironed out, then I think we head in that direction. Now, one thing I noticed this week, or that came out this week, was this buy little candle here. There was some huge volume, and this was central bank buying. And I found that out of context with what we're seeing here. So it was an effort, in my opinion, to prop something up. So we started to hear the echoes of, bank failures again, starting the later part of last week. So, I've been digging into that realm as well. So, we have the Straits of Hormuz, where we have this degradation that's coming to supply chains simply because it's been shut down too long. And there's going to be a huge gap between the inventory that we have and run out of until when that inventory starts again. Sulfuric acid is a great example of how broadly that spreads throughout the economy. And one thing that we're looking at is how that's going to affect, in an area that I have a lot of interest in, is agriculture, but I don't think the bulk of the spikes occur until 2027. So I don't urgently have the desire to enter those positions yet, but I think if history is the tell, we should see more flight into TLT at this point, simply because the central banks are off balance and the countries that are dictatorship have to rearrange their balance sheet in some way, so they have to manage their currency a little more aggressively. And that's what I think will wash into TLT. So there's a good possibility that we bounce. And like I said, we get down to my 83.80. I'm interested in trying that long. So hopefully it gives us enough time to get down there where I can get the conviction to take something in that direction. But right now, I still think it's kind of neutral in the weeks ahead. And with that, let me migrate to the S&P 500. And this is just one hell of a rally. We're not confirming. Obviously, we're confirming on this leg. Our highest high was way the heck back down here in RSI. So on this second drive at 568.49, and right now we are roughly at 731, and we have not even put in peaking drive 1 here. So right now we are actually above my higher slope, where I'm looking at a second standard deviation. So the fact is, we could actually accelerate a little bit further on this from where we are now. So I'm obviously looking at, well, where do we go? How do we get a piece of that without getting caught on the wrong side from another event? But that slope, just add right in. Third standard deviation push is totally viable. So anything that's working, there's absolutely no reason to trim. You want to hold, you want to try and build positions in certain names as they pull back. DBX and Zscaler. I actually like Zscaler a little better because once we work out this supply chain issue, that has a direct correlation to AI, because once the scaling starts is where they'll start seeing their pop. And we're talking maybe 2x their current earnings potentially that could come in. I don't know that it hits 2027, but we want to definitely try and have a full position going into the second or third quarter of 2027. So I'm looking looking out in time as far as the timeline here. So right now, until we break below 697, the bulls are in control of this, and there's no reason that should wane without some kind of black swan event that just knocks us off of this perch. And right now, the way the dip buyers have been coming in, I don't see it winning. We're back to really the 2022 euphoria, but we don't have the breadth, which makes it challenging because you can't just chase everything. Either you're in the names that are working and running, or you're sitting on the sidelines, or you're actually underwater kind of thing. So I don't think that's going to change. We have a different dynamic. We now have the NASDAQ leading pretty aggressively. I would think that we get some kind of pullback around the 78.6 here, maybe around 740, maybe back tests about 675. That last leg will, we hold up, we get some kind of resolution to Iran. My thought is we're going to chase a larger number of positions at that point. Now, the concentration that's going into AI chips is significant. And, a parabolic move right here on Soxel, for example, is 444. We're at 161. It has some huge upside if we really are going to have like a mass build out all at once, because now everybody thinks they're behind because we have a resolution to the power issue regarding AI infrastructure. We have a resolution to the Iran war. This is an area I think we really could launch. And to be candid, two of the names that just stick in my crow right now are AMD and Intel, because I had them both in the early stages and I didn't add them and I didn't keep a piece on them. And now they're leading in this rally with semi, and I don't see that waning. Now, one other thing that popped up on my radar this week was SLV. There's a good chance, or actually yesterday, there's a good chance our ABC is in. So this was an extended A. This is our B, this is our C. Unless we take out this low at 664, we're probably heading back to the high. So once the bulls get back in control over 75, that pretty much is your conviction to chase silver long. On top of that, with the sulfuric acid issue, there is literally going to be a processing glut for silver. And currently we are consuming, I don't know what it is, 90% of the supply. So if that comes offline and the mines no longer can process silver, we have a potential significant pop in silver, and we could see significant all-time highs. And, that really could push us right up to that parabolic zone at 133. All right, let's take a look at Bitcoin. Very constructive here. This impulse wave I flagged out or drew out last week, I think we hit some resistance around 94. We had some pullback right at 80K, but we're now acting like crypto wants to run again. So like liquidity is going back into it on a pretty solid basis. So we get any pullback to, roughly 75, I would say the dips are viable, either via IBIT or I personally like Link or XRP. I haven't ventured back into XRP yet because there's a little confusion for me with what Congress just did as far as reining in the proceeds that a person can receive from the Treasury-backed stablecoin. So that whole dynamic has changed. I'm sort of waiting to see how that plays out, because that may have a dramatic effect in how money moves around. And basically what happened is they secured a funding mechanism for U.S. Treasuries, not the growth of cryptocurrencies or the financial market in the crypto market. And so the profit has been reduced substantially, because basically if you put money and you sit it in stable coins, you no longer can make interest on it, is the simplest way to put it. So it's not like a bank account. So there's going to be limited ways that you can profit. And most of that is going to be probably through the miners or like Coin or Kraken, where they're selling the currencies and making that proceed. They're going to be very small windows open as far as profit. So we'll expand on that as I get a little more comfortable with that dynamic. Right now, I'm in I don't know how that's going to play out. I don't have a clear picture where it's going to play out. So I'm sort of kind of sitting on the sidelines at the moment. Get a pullback to about 42 in IBIT, then I get interested in entering a position there. All right, let's talk about energy for a second. Now, this is a pretty aggressive ABC that is building out here. So literally, we could see a significant pullback, even though I don't see it in the mechanics of oil. I see continued scarcity, probably well through the first quarter of 2027, maybe as far out as the third or fourth quarter. However, that doesn't mean that we don't have demand destruction because of cost. I was noticing that our gas prices here in Texas just top $4, which is the highest I've ever seen it, especially in an oil producer state where we have discount prices anyways compared to everyone else because all the fuels are here. So that would mean that I think midstream gets hit, but yet oil stays elevated because that demand destruction from issues like the sulfur, the acid, just weighs so much on consumption because of the price inflation. And I would not be surprised, by the way, and we want to recognize this, into the next Fed meeting, there's a very strong possibility they hike on this now to get in control of what inflation's coming, because the inflation we potentially have coming is worse than what we've seen in the last 10 years because the dynamics are that extreme. So I would not be surprised if they do not come back and completely wipe out the cut that they've already put in play, simply because they are more concerned about runaway inflation to the point where they can't control it. So they're going to want to tamper things down a little bit there as far as my opinion is concerned. So, all right, let's jump and look at some names that we have open. Let me just start off with Link. It's working. Basically, it's a hold. We're looking for $14 out of this thing. Oracle, I closed it like an idiot, and it's working totally. I think it's got as much potential upside. I think we completely take out these highs at some point. Right now the most likely box is this 618. Hopefully some of you took that or have it. So I'm thinking that this box is where my bias is. As far as where we go initially, then we get a pullback, and that would be wave one. So we have a decent amount of upside here because we could come out and plug something in very similar to that. Maybe the 1618 at 325, and we're talking a stock that's like $190 here. So I like the upside there. Sentinel 1 is working. Smart for us to hold it. I'm just going to hold. That's all there is to it. Google obviously is just a behemoth. I mapped out what I see as far as my mounds here on the lower structure. So, we're in mound 1, right? Mound 2 will tighten and get skinny, a little lower RSI resistance as we consider to build that euphoria. And be very candid, there is absolutely nothing with how euphoric this is and the momentum. Why we could not push to the 3618, $1,022 on the way this tape looks and how it's building in the market. Across the board, every day, the futures are going out further. I was noticing yesterday that we had a large number of people buying leaps. They weren't big institutions. There were a lot of retail investors, but a lot of people have a lot of conviction behind this, and it's across the board. So I don't think it's going to slow down yet. Maybe around the 78.6, we get a pullback, and that becomes our wave one when we get to my right tool. So that would be something, maybe about like this, where we get a pullback, then we finish this out, whether we put in the 618 or we continue to the 3618. So I think there's a little pullback around 430. So I think we got plenty of room there. XYZ, we put on some cash secured puts sort of as an earning play. The idea was just to make a couple bucks on it. Seemed like a pretty safe bet considering where we were in the middle. I was looking at this as wave one. We're putting in wave 3. I think this, if the shelf breaks, then I'm out at 67.35. But I think our target is about $82, just to earn some premium. Bros is working. Bulls are not back in control. Do we take out 66? But I think 69 is our 3. I think it'll be an extended 3. And right now, the way the candles are coming in with that breath, it sure is implying that. And again, until it breaks below 52.89, the bulls are in control. Let's just try and keep a piece of that. Now, Expedia was also an earnings play. Again, I sold premium, sold the 230s just because of the structure in the same way. I don't think it's going to take that out. Right now, I've got my stop line down at 217. I'm probably not going to hold it that far if it takes that out. But right at the moment, I'm just trying to let that premium decay. At a point, obviously, when you're selling cash secured puts, that's the game plan. HP absolutely just is blowing through it here at 2140. We have 21 calls. Mine expire the 15th. Right now, I'm letting them run. I see no reason to pull them off. we get up around that 3, right at that prior breakdown shelf, roughly at about $22, I'll probably start taking some profits there. Or if it breaks my confirming trend support line, which roughly right now is at the base, the wick. So we close below that. Let's pop it up here quick. So we close below roughly about 20.85. Then I'm going to go, actually, let's say 20.80 just to round it off. Then I'll probably trim. Right now I'm running a 12% trailing stop on that, so we're just going to let that run. All right, let's jump over to the OSS. I'm counting my waves here. So we got peaking drive 1, peaking drive 2, peaking drive 3 is totally viable, except for it probably doesn't extend past that 685 at 22.51 because that is totally parabolic as far as that move's concerned. When it gives it up, it's going to go back to the shelf $12. That's challenging. I'm going to come down to the 4-hour on this one. We are clearly confirming here. So if structurally we look at this, I'm going to consider this my 1. If you have puts on that, just hold, let them expire. Let me go back to my daily. I'll see how big these candles are, how extreme that is, how much of an outlier. Off of the lows, it likes to come off. Decent candles. Got it here. So that's the MO. However, it whams afterward. Look at all these. Whams a little bit afterwards. So this is probably a good map. I'm just going to take this as the map, and I'm just going to steal this for a second. It's just, however, in this scenario, we've extended substantially on our 1. So this is a fairly aggressive move. If we just look at where equality is, we should run into some resistance soon, I would think, depending on what the catalyst is there. That the noise here could be aggressive. You could pull back to $11. And still, it's done nothing wrong for the upside. Obviously, in the perfect world, which we don't seem to get very often, is that that becomes your failure point. That shelf breaks at 12.75. I would definitely be down to a 50% position size if that's the case. All right, looking at GEV, it's just trending, confirming, not done. So you got at least one more divergent high here. So I'm going to look at this structurally. Let me just map this out. I don't know why I missed. Geez, I thought I went through all the names before 1, 2, 3. I guess I can't be perfect, huh? That's all right. That's being human. All right. So yeah, I think we hit a little resistance around 1263. I don't think that trend breaks. It looks like an extended trend. And the reason is if we look at this line that we've come in here, look at how close we've tagged it. Tagged it right there, shot a little bit higher. So, that has raised our slope. So let me just go in. I'm going to clone that and say this is the slope that we've increased to. So we now have this next slope line here, right? The next slope line will come up a little bit above there and realize that typically runs similarly. So now our next slope jump. So we have more breadth. So the likelihood is that we jump again. And again, this is just like RSI or how Elliott waves move, is they tend to like to come in 3, 5s, and 8s as far as how they jump. So this next leg up will probably be similar or equal to this. If it's less than the breadth between these two lines, then I would be trimming. If it comes in like this, and that ends up being our low, and we never take out this high, obviously I would be trimming there. But, you could just run a stop right off of that 1,052, and it's probably in a pretty solid place. All right, BE's hitting a little resistance here, still confirming, except for we have 3 peaks in RSI, which likely means we pull back. I'm going to do something I don't do very often, but I'm going to stick some fibs up here on the RSI. So that would mean that we could get a pullback to 58 in RSI during this final little push. So I'm looking at this as peaking drive 1, peaking drive 2. We get a peaking drive 3, then we get a decent pullback. So let me map that up here to give me a visual, or give us a visual. So we've got 1, 2, just measuring roughly. So probably around 422, maybe a little less than that. Pull it back a little bit. That means that this wave 3 is shallow because this is mound 1 clear. Mound 1. Look how clean that mound is down here. I mean, it's just clean. Beautiful thing. Jeez, I love it when I see that. That mound just comes in. Help if the tool work, right? Huh? So mound 1's clean. We're now accelerating on the slope. So it's accelerating on this trend. So I don't think that trend breaks. But I would use that. I would use this wick for the time being. This wick right here at 215.61 as my stop. And I'd only trim to 50% until it takes this ledge out. If it doesn't take that ledge out, I'd hold the balance till the run. I'd only take profits if it takes out that wick. So I would be in it for the balance until that 198.67 break. All right, looking at A-Lab. It's getting out of here. pretty much doing what I mapped before. Let me go back out to my weekly here. So, this was our initial projected box. From that, we've now got 3 generals. So we got a clear structural wave 1, pretty clean, nice tight flag box. 3 should accelerate. Let me bring some fibs in off of our prior mound just to give us a better visual. So 1618 is a very good spot for 3 to finish complete. Will probably give us a pullback to maybe 358, but you're in a pretty spot with $200 stock here. Looks like it's going to double from here. AAOI, can't tell you why, I don't know. Geez, seems to be the MO this year. All right, so looking at, I'm taking this as our 1 here. So 1, 2, 3 should finish probably about here. I think I lost my 3. All right, let's do it again. Remove it. And the reason I'm pushing up here is because this is peaking drive 1. This is peaking drive 2. We'll get a peaking drive 3. Should probably come to about here. Do something like this. But let me throw some new fibs up there on that. I want to measure the 1. See where that comes from. Tamper that down a little. That would be 1 heck of a parabolic move up to 543. But it's totally viable. Confirming trend support. I would push it up right to your wick and just ride at 132.63. Micron. Just a behemoth. Again, this is reacting to the semis, but just structurally, look at our slope here. This is our 1. This is our 2. We're going to get a 3. We're going to get a 4 and a 5. There is absolutely no question. You got a confirming high here on mound 1, which is early. Typically, that implies that we have a very parabolic movement we're having. So, cleanly, we got peaking drive 1, peaking drive 2, peaking drive 3. Then we got a pretty clean flag. Went a little bit below there. I would not even think about trimming this one until it breaks below this wick on the shelf here at 471.34. Otherwise, just let it ride. You want more of a position on that, actually, because this will be like SMCI and Zscaler, because the control switches that Micron manufacturers is very specialized. And, I don't know if anybody heard about Pulte Homes and their data centers. They're going to start attaching to new construction homes, and they're doing like this swarm data center concept because they can roll it out quicker and build it in the home. And the incentive to the homeowner is your power bill and your internet's $150 a month, but you have to let them put up the solar panels. So it now incorporates solar panels and data. I really like that concept. And I think it takes off simply because now you have a fixed cost for utilities and you have a fixed cost for internet, which is not something, at least that you have in my market, because we're so demand driven, especially with our extremes in the summer and the winter. We end up buying power off of the grid every single year for 6, 10, 12 weeks, whatever it is. And then we're subject to premium of what actually happens here in Texas. So I would actually welcome that idea of capping my utilities and my internet. So I would want more of Micron. EWJ. Japan, I believe, was the party, the central bank. At least that's my perception, just because of their currency dilemma, their growth dilemma that they have, the inflation that they're currently experiencing. So they are a better candidate than China being a seller at this point, because China has to convert all of this additional investment in oil, the premium they're paying, and that requires treasuries for those exchanges. So I don't think their pull is going to decline. I think it's more likely Japan. So the inflation is going to support that thesis. So looking at wave 1, and let me just physically break this down, just cost average in if you don't have a position in EWJ. That would the way I look at it. So, we're going to look at, I don't think it's going to end up, it could be leading diagonal. In other words, where wave 2 is broader than 3, and we finish here at 101, still isn't a bad move, and do something like that. Or 3 becomes the longest wave, and now we're pushing the 2618, which would probably push 3 up to about 113. Not quite the longest wave. Just measuring here. So yeah, that would push it to the longest wave slightly, pull back, and then put in the 2618 from there. So that's, just on any of these country sector ETFs, if you want exposure in that market, as long as the inflation is going to be on their side of the fence, you really can't go wrong, because it's kind of a safe place to bet right now. It's sort of the way I'm looking at wheat, soybeans, as well as corn right now. simply because of the dynamics. We're right in the middle of corn planting season, and I think there's 8 more days, 7 more days where they have to decide whether they're going to put fertilizer down now or not. And if they put fertilizer down, it will not be the normal dose. It'll be like 20% of the dose or nothing at all because of the expense of fertilizer at this point. And then they let the crops. So in 2027, we are going to have significantly diminished crop, and we have a famine present throughout the world as a result of that that's building at this point. So that inflationary pressure that we're going to see from I think it's broad. I think that we could see the worst inflation we've seen in 25 years over the next 3 to 5 years, simply because of what's happened with the straits and the fact that it's not open up again. So Japan, I like for that reason. The only concern I have is if they have too big of a push, and you end up with too many forced closures on trades and positions that are open, because obviously a majority of the equities are owned by the Japanese citizen. And if their pocketbook gets strained elsewhere, they might be forced out of position. So just be conscious on your position size with that. Okay, so anyone else have anything else they'd like me to look at? ARM was a good choice too, by the way, Dan. AMTX. You're married to that one. It'd help if I clicked the right button, huh? It is surely testing that. It looks to me like it gets out here. I mean, it's right there. Wave 1 is pretty solid, clean. And I mean, if you take this as our 1, this is our 2, this is our 3, this is our 4. 5 should push to at least up to that 540 that I mentioned. But that euphoria is back here. Notice this candle. That's the spot where we should reject. I'm just looking at, you have this sell-side imbalance way back over here that came in from this block right here. That huge band right there. We're right in the middle of that, right at the top of that. I mean, notice how close we're testing the top there. So, once that clears, we probably will continue to 540. Then that back test, if this ledge holds, that really is a launching pad, and then we're heading towards 11. Yeah, I agree with researching sectors. That's, honestly, you need 1 to 3 working themes, and then you're flat on everything else, and it works really well, which is one reason I like to shift to themes. The challenging part is where the dynamic have switched so much with what's going on with the Iran war. We don't know when that news is going to come out that just takes out all of the goomph that we had left in the market. So, but I agree with themes and research. And truthfully, fertilizer sort of taught me that, because I didn't, honestly, I didn't think about sulfuric acid. That was actually counter to the scarcity issue. It was kind of a demand destruction kind of thing that played out there. All right, so ENPH, I drew this 5 down, and no reason to change my mind here. I think it comes down. I mean, we could be done. It takes out this 37, then you got a shot to pull back to the upside. However, with midstream weakening, the most likely outcome is probably going to be like a triangle here, maybe something like this. So even if it does push here, it would be something like this. So we'd end somewhere around 33 and then take out, head back to the upside. All right, let's look at GitLabs. A lot has been going on with the repos, and repos basically are what run, those of you that don't know, run everything that we use on the internet. So, my C was down here. We have a confirming low, little divergence. Actually, it looks pretty good right here. Let me try and find a reason why I don't like it. So I already cleared the first lower high, kind of choppy, pretty solid divergence down here on that low too. It takes this out. This is where I'd have full position size on, would be anything above this little wick right here at 28.33. Your stop is just your prior low, because there's really nothing to fall back on. Let me go to the weekly, make sure I'm not saying that wrong. Yeah. Once we clear this ledge, then you could add, then a full position size at 28. I like the look of it right there. All right, SPWR, nice risk reward here. I'm going to clear all this stuff off here. I want to do RSI weekly. Let me look at the daily. I don't like that confirming RSI here on this last low. Pretty big line. Don't like that. So assuming that is our measurement here to here. So Flushing Drive 3 could take us down to 61 cents first. I don't think I would be interested in adding here until we clear this wick. Back here at 126. USAR. Now there's going to be some not demand destruction, but related to the sulfuric acid. And forgive me, I'm just going to clear all this off on this chart and start clean here. And that's a tailwind for this name. I'm just going to call this 1. So we're solid at the 618. The 1618 is really your next target. There's no reason to trim this at all. Just use confirming trend support. Your minimum, you're looking at that, probably getting up to the 2618 at 53. We've already taken out this wedge high kind of thing right here. Already taken this out. We're cleaning above that. I mean, literally, you use that as your stop if you wanted to. Depending on when, I think you were in that a little bit earlier, though, if I remember correct. We're confirming here, so we're going to get a divergent high here. So this is peaking drive 1, peaking drive 2, peaking drive 3. So about $33. If we're going to break down, that's about where it'll be. So it'll take out this wick. But be mindful, at 30.50 we'll hit some resistance, so it could back test to 26.36. So as you're structuring your position, keep that in mind. Thanks, Dan. Actually, believe it or not, it took about 30 minutes to write that article. I'm getting pretty quick on some things. Once I see the idea or the theme, man, I could get right into it now. I have I don't know, I think it's 37 AI agents working on geopolitical things now. I mean, an exciting thing, that's for sure. So, I think I covered anything. Anything else, folks? Fantastic. Hey, and by the way, guys, if you haven't responded to my post about what stocks you're in, my main idea here is I want to get a sort of a consensus on where we're leaning as a group. And then I want to drill down and find out who is potentially going to experience that supply disruption that's going to be relative from the Straits of Hormuz, sulfuric acid, or anything else as an example, or the scarcity of diesel. So that just gives me an idea of, a larger picture. I can have AI map that in 3 seconds for me now. And I like those kind of visuals because it gives me a good focal point and we can find some good ideas out of that. And outside of that, folks, great trading. Until next time.